Okay, so good morning, everybody, and welcome to the next installment on our informative information briefings in relation to mortgages. Thanks a million for all your feedback so far, and the good, the bad, and the ugly. So this morning we're going to talk about self-employed. So we're getting a lot of inquiries coming through in relation to how you go about a mortgage if I work for myself, whether a sole trader, company, umbrella, IT contractor, etc. So for the next 10 minutes, I've got a clock here. I'm going to talk you through the intricate details on how you go about applying for a mortgage if you're self-employed and what we have to look at. I'm going to go through figures. It is quite technical because it's not as simple as a PAYE, an employee's application. So hopefully everybody can follow it. As ever, come back to us after this. If you've watched it, watch it as many times as you want. Come back to us for a complimentary meeting and we will review your situation with you in detail. Okay, so straight into a little bit about the company. I'm going to assume most of you are familiar with who Symmetry Financial are at this stage, so where we're based, our staff, headcount, etc. So we'll skip straight on into the meat of the presentation. So by self-employed, what do we mean? We mean that you're a sole trader. For example, you're a solicitor. You could be a sole trader, accountant, plumber, electrician. A lot of tradespeople will be sole traders. Or you're a major shareholder in a company, so you're a company director. By a major shareholder, we're talking about more than 20% shareholding on average. In relation to what type of people are going to be company directors, again, it can be an accountant, IT contractors, electricians. Basically, a rule of thumb, if your turnover is significant enough to merit moving from being sole trader to a limited company, you'll know what category you fall into. Okay, you could also be working within an umbrella structure, so where you are an IT contractor or some form of a contractor. And within the umbrella structure, you are also a director of a company, but you don't own that company. The company is provided to you by this accountancy firm or umbrella structure, and you are paid as if you're self-employed. And again, the following rules will apply. So in relation to the sole trader, how does it work? I'm going to give an example so you can bear with me. But in essence, how it works is we take whatever your net profit is before you pay tax. So you have your profit and loss, you have your turnover minus your expenses gives you your profit. That's what you're taxed on. Your income tax is going to be based on. That's what we're working off. If there's any depreciation within the company, and it's depreciation on assets that aren't necessarily going to be replaced anytime soon. Any interest, so for example, machinery, large plant items, for example, any interest on borrowing. So if you have loans and if you are a sole trader, those loans would be in your personal name. So whatever interest you're paying on those borrowings, again, we need to get the statements from the bank to figure out what the interest is. Plus applicable expenses. Applicable expenses can be something like motor expenses, and then one-off items. One-off items can be the sale of something or the sale of items within the business as well. So again, I'm not going to give too many examples because obviously this is specific or would be specific to your business. From that, you deduct any repayments that you have on debt, and that basically comes up with your income for that particular year. Then we do the same thing for the following year, and now we average it out. Okay, so that's in essence, or in summary, that's how it works for a sole trader. If you fall into the company director scenario or the umbrella company scenario, so all the IT contractors out there working with Icon or Fenero or Contracting Plus, for example, and there's other ones as well. You may not own your business, but you're plugged into a business, or you are a company director where you and or your business partners are the directors on and the main shareholders of the firm. Same thing, we're looking at it over 2 years. So we're taking what was your remuneration in that particular year? What was the net profit before you paid tax in the particular year? Any depreciation, same as before. Again, it's specific. What is the depreciation? If it's not clear what the depreciation is on the financial statements, we need to get a breakdown from your accountant. What was the depreciation figure? Any interest on borrowings and one-off items. Example of a one-off item in a company scenario would be directors' contributions towards pensions. Again, motor expenses, car allowance, that type of thing. And we add all that together. If there is any debt, we then take away the cost of that debt, so the loan repayments, the lease repayments, hire purchase payments, and that gives us your figure. So just to give you an example, in a very, very simple scenario. So this is a turnover of 2021 and 2020. The first thing I will draw to your attention here was there was a significant drop in turnover between 2020 and 2021. So before we dig any deeper, we need to explain to a bank why there was a drop of over 150,000 or about 150,000 in your company turnover year to year. Cost of sales obviously had reduced, but that scenario there tells me either the business had been restructured, you lost a contract, or something was going on there. The profit was actually greater, so everything about the outcome was stronger, but the drop in turnover would be something that would have to be explained, because it could be a concern to a bank. So we drive on down here. We have your profits on activity before tax. So before you pay, in this example, your corporation tax. So that will be 23,000 in 2021, 19,700 in 2020. Then we dig even deeper into your accounts, and we have what's called your administrative expenses. First thing I'll bring to your attention, when you are looking at your financial statements for the previous year, has your accountant included this actual item, list of items, the administration expenses? We often get financial statements from accountants and they haven't itemized out the administrative expenses for each year. They just give the total figure. We will, just to be clear, if you're looking at this for yourself, you will need to get your accountant to expand on what is the makeup of the administrative expenses in each of the particular years. So in this scenario, we've got director's remuneration, we can add that, and then we've got depreciation. But because the depreciation is something that could be deemed is going to be replaceable in the short term, the bank may or may not accept it. So we're going to leave it off in this scenario. Okay. Any pension contributions in this example, there's not. Okay. So it would show up there if there was director's pension contributions. So how does that work then? So to summarize it based on the previous two slides, so the net profit before tax from 2021 and 2020, the depreciation from 2021, 2020, and 2021, and then the director's remuneration from the same 2 years. So what I've done there is I've averaged 2021, adding the net profit, the director's remuneration to give it a total of 78k, and for 2020 the total is 74k. What I do there is I take the 2020 and the 2021, average it out, in this case 76k, not including depreciation because it's assets that may have to be replaced periodically. Okay, so we come up with a figure there of 76,000 for this director. What I would say is if the situation was reversed, where the income had dropped from 2020 going into 2021, we have to explain why the income dropped from the 2 years ago to the most recent trading year. And hopefully it's a standard explanation. A lot of self-employed people would have had trouble in 2020 with COVID, and a lot of questions I get in that scenario is, are the banks writing that year off? They're not. What the banks are doing is they're taking the 2020 figures and they're now looking for 2021 if there's any sign of weakness. So we're only in January 2022, and already in the first month of January, I've probably told about 15 businesses to go and get their 2021 accounts prepared now. Why is that? Because we're going to need those figures to assess their application. The banks aren't necessarily going to work just off the 2020 figures. We need to show strength returns to the business in 2021. So while you might be thinking about completing your returns on your business or your own personal tax return until June, July, August later on this year, you're going to have to pull the finger out and get your accounts sorted in January and February. It's your accountant's job, but you obviously do have to feed that information through to them. Hopefully you found that useful. In relation to self-employed mortgages, what also is relevant is the percentage holding within the company. So if I go back here and the director's remuneration is 54k, but if that was 2 directors, then you're only going to have half of that allocated to you. So the 54 would now become 27. And obviously the max allowable income would be significantly less, as would the net profit before tax. That would also be halved. So in this example, if it was 2 directors, 50% shareholding each, that 76 would actually be 38. Okay, so that's an example of how the shareholding would impact. If the most recent year, as I've just said, if the most recent year is less than the previous year, more likely to go with the recent year. So if my figure is 100,000 2 years ago, but last year it's 80,000, banks would possibly just go with the 80,000 unless we can give them a reason and rationale why they should go with the average, which in that example would be 90,000. The overall strength of the company, so I mentioned there about the drop in turnover from one year to the next, that needs to be explained if it's going forward. Obviously, if it's historically and it's increasing, That's what you want to see. But obviously COVID will have thrown the spanner in the works for a lot of people in that scenario. Cash flow. So what's cash flow in relation to the build up in the business account? So I'm looking purely at your financial statements here. Now we look at that in conjunction with your personal income and expenditure, but also, and more importantly, your business income and expenditure. So are you running into overdraft every month? Are you building up money in your business every month? Etc. etc. Impact of COVID, I've already referred to. Management accounts. So if we are looking at this case in July 2022, so if you're looking at this later on in the year, you definitely need your 2021 set of accounts completed at that stage. But also you need management accounts for January 2022 up until May 2022 to show the bank how you've actually traded over the following 5 months in the new year. Okay, so that's what's called management accounts year to date. Future contracts, projected accounts. Projected accounts don't really help, but future contracts, if they can be proven, where would that fall in? Very, very simply, if I'm an IT contractor, I might have a contract, for example, with PepsiCo for the next 6 to 12 months. That is extremely useful to provide to the bank to give them strength, or to provide strength on your application to show them where you're going to be going into the future. And you might even have longer. You might have a 12-month contract going forward. So what bank is right for you? Obviously, that's not something we discuss on our webinars. What we do explain is every bank assesses your application differently. For example, the pension contributions I mentioned there, not every bank will allow you to add back in the pension contributions. So if you're paying 30 or 40 grand into your pension and you've done that over the last 2 years, not every bank will say, okay, he could have paid himself, or she could have paid himself that 30 or 40K, so we'll add that back in the salary. Not every bank will allow you to do that. There's obviously a question mark around KBC there and a big X through Ulster Bank. So you've heard webinars, you heard me covering that in previous webinars. So why should you reach out to us? As per all the previous webinars, and any of you that have engaged with us, we're here to represent you. We don't represent the bank. We're looking after your interests. We're going to tell you how to apply, when to apply, what structure to apply. And if we're submitting your application, you can be pretty sure that you're going to be successful. We get paid by the bank, as most of you will know at this stage. So that 1% is important to us. So as is your mortgage important to you. So it's symbiotic in terms of how you work with us and how we work with you. We have deals with different companies. We have partnerships with different trades. Some of them are thrown up there in relation to painting, decorating, legal, interior design, landscape and cleaning, etc. So get onto the website or drop us an email at info@Symmetry Financial, and we look forward to taking your queries and dealing with you over the coming weeks and months. And thank you very much for listening in this morning. Bye now.